Hi, and thanks for joining us here at Finovate Fall Digital. I'm David Penn, Research Analyst with Finovate, and joining me today is Paul Rohan of Google Cloud. Paul, thanks for joining us.
You're very welcome. Thank you, David.
Excellent. So we're going to talk a little bit today about Google and financial services, which is a combination that a lot more people are starting to pay attention to these days. So to start, maybe by way of introduction, could you tell us just a little bit about the work you do for Google Cloud?
Yeah, sure. I'm part of the Apigee team at Google Cloud, and we specialize in API management platforms, which is very relevant for financial services at the moment with open banking, the API economy, digital ecosystems. So my role is part of a team that works with customers on trying to ensure that they have a strategic business impact from using our technology. So technology is fascinating, but it's not much good if it doesn't have a big business impact. So we work with our clients on making sure that if they're moving into new, different marketplaces like the platform economy, the API economy, that all the other things that are success patterns or failure patterns, whether it's governance or business strategy or brand strategy, all those non-technology elements are also aligned to what they're trying to do. So that's the team I'm part of, and that's the type of value we add.
Interesting. You used the word impact a minute ago, and that sort of leads me to my next question. You've written a pair of books, one on PDST2 and one on open banking. And it was a few years ago when you wrote those. And I'm curious, in terms of impacts, how have you sort of interpreted the impact of those two movements in many respects in the years since you opined about them years ago?
I've gone through a journey that has been very interesting because I've been in financial services for a long time, using digital technologies and financial services for a long time. But from a young age, we were trained that the primary thing to focus on was competition inside your vertical. So we all sat there in college and we looked at Michael Porter and the five forces model and new entrants into your vertical and substitute products and inferior products and all those things. And that the biggest driver of rivalry was your traditional rivals inside your vertical. Sure. So when I started looking at the platform economy, APIs, and open banking, that was my starting point. So how was this going to impact on the existing rivalries inside the vertical? And it became apparent as I went on this journey that really competition, the nature of competition is changing. And if you want to capitalize on these changes, you almost have to move up a level beyond the vertical you're starting in, whether it's banking or insurance or healthcare or retail. And before you jump into what are these new technologies and these new techniques going to do to rivalry in our vertical, you almost have to step up a level to what are these new approaches doing to services? So what is the impact of collaboration, digital collaboration and partnerships using APIs, platforms and apps? What are they doing to the nature of competition in all services? And how are services going to be designed and delivered and consumed? And I think once you move beyond your area of specific interest into the impact on all services, then it starts to make a lot more sense. And I think then you start on a complete journey where really you start to regard competition as almost being between ecosystems rather than being between specialized products. And this is a major change in mindset because you start to realize that you could have the very, very best banking product with superb features and brilliant pricing. But if it's not part of these connected digital experiences across multiple brands that customers are increasingly demanding, it could fail. And you could have a middle of the road, not the best financial product with not the best prices and not the best features. But boy, if it pops up with the right context, at the right personalization and the right customization in these connected digital experiences, it can be a huge success. So I started writing these books from this point of view of inside a certain vertical, and then realized that what's happening with services more broadly was beyond banking, and that the nature of competition is changing. And once you start to internalize that, then the next moves and the next steps for a specific enterprise become much easier to think through.
Oh, well, fascinating. You brought up so many concepts in there. I couldn't help but scratch out a few notes about the changing nature of competition itself, being a driver of an innovation. And you talked again about the idea of these connected experiences, which leads me really to something that just sort of leapt off the page when I was reading in your remarks before. And that had to do with the idea of open banking as 21st century branch banking. And I really wonder if you could maybe expand on that topic.
Yeah, well, branch banking is around so long, we sometimes assume that that was the default distribution model from the start, whereas in fact it wasn't. For an extended period, the unit bank was the norm. So a bank that was one branch, just itself, in a town or in a district. And I started studying this, and I actually discovered that Alexander Hamilton signed the first piece of legislation that allowed branch banking in the US.
Awesome.
And so that brought a few tunes into my mind. But when you look at it and you realize that why did unit banks fall away and then branch banking became the norm? Because it didn't matter how superb the staff were in the one branch you had, and that how wonderful the customer experience was once they came into the branch, and how fast the decision making was because everyone in your bank was in that one location. Right. If your one branch was in the wrong town or beside the wrong industries, as things changed, it didn't matter how wonderful the user experience was. A bank needed diversification. It needed to be exposed to different parts of the economy. So it needed deposits from the older people and the older businesses to lend money to the younger people and the younger businesses. It needed to have branches beside ports for the importers, exporters. It needed to have branches in parts of the territory where people made money in the summer, so they could lend money to people who planted seeds in the summer. So banks when interstate banking was allowed, branch banking became the default because a branch network allowed you to adjust to the seasonal and structural and cyclical changes in the economy. And you could move money from one part of your branch network to the other to meet credit demand. So branch banking proved to be far more resilient. And in essence, banks started to allow customers to begin their customer journey with the bank where the customer was living their lives or running their business. And then the big wave to get paper out of banking and to stop the bad decision making in some branches, banks went digital, but the default starting point was one app. And the question that we ask from a Google perspective, because Google is immersed in the platform economy, is, do bankers really think one app is the endpoint? Because one branch wasn't the endpoint. And in that context, as the world moves towards digital ecosystems and customers expecting connected experiences, then if a bank wants to be connected to the full diversity of customers and to start customer journeys where customers are spending hours every day rather than just a couple of minutes on the banking app, well, then there's a strong analogy between open banking and branch banking, because open banking allows you to participate in customer journeys that are beginning on all sorts of third-party apps. And in aggregate, a customer can spend hours and hours a day on third-party digital surfaces. So a bank wishing to give itself every opportunity of diversity and growth and vibrant activity should be focused on allowing banking services to participate in third-party experiences. So in that context, I believe that the end state for banks is not one app. The end state is customers can begin their journeys, which include banking services, at hundreds, if not thousands, of third-party apps, just like customers used to begin their customer journeys at hundreds, if not thousands, of branches.
Sure. How difficult is it for financial services, for banks, to make that transition, both culturally and technologically?
I think at the moment, well, to be fair to the banking industry, some historians think it's 4,000 years old. The business of taking deposits and, marking them up and taking a risk in terms of loans. So you got to respect the fact that the banker's craft, has adjusted to a lot of technological and changes in distribution, and it made the adjustment from unit banks to branch banking. So there's no intellectual reason why bankers can't figure out network effects and can't figure out how to market themselves inside this context. There's a little bit of fear because sometimes there's a narrow view of brand strategy, that our logo is our brand. And of course, your logo is not your brand. Your brand is the emotional connection you form with your customers. And increasingly, younger customers and younger businesses form an emotional connection to you through connected experiences involving multiple brands. So in that context, increasingly, we're finding banks are getting more and more comfortable with the end state, that this is something that can be mastered. And yes, there's a matter of working through older technologies and older methods to get there. The big obstacle is actually getting started, because where to start, and the platform economy can look very daunting and complex, and you sometimes have to remind them that, listen, probably Facebook figured out 80% of what they needed to know about social networking just in Harvard University, or Visa card. The precursor to Visa card was Bank of America figuring out how to do general credit cards just in Fresno, California. And then it was just a matter of scaling that globally in both cases. So it's trying to get banks that have become quite monolithic, having a couple of apps geared at the mass market, is trying to say, listen, you can learn a huge amount about these extended customer experiences with multiple partners and multiple brands in a couple of micro segments. And then it's just a matter of scaling that up across your organization. And then that's when Google, obviously, with cloud computing, steps in and says, once you start aggregating demand through lots and lots of partners, you can't tell them you've run out of your server farms, your data center is full. You've got to have variable processing power, variable cost. So there's a natural journey in terms of business model innovation to match where the economy is going generally, and then the capability management and the capacity management of those types of business models.
Certainly. One last thing I wanted to touch on was another concept that sort of left off the page as I was reading a bit about your presentation at Finovate Fall Digital, and it was the idea of the difference between an app strategy and a platform strategy. And I wondered if maybe you could expound on that just a little bit.
Yeah, it's sociologically incredibly different, because I've worked both in traditional vertically integrated enterprises and inside Google, which is immersed in the platform economy. And the sociology is quite different in that in a traditional enterprise that's quite reliant to doing everything themselves, and there's always a human desire to innovate and serve your customers. If you do something clever to serve the customer in a traditional enterprise, there's a big round of applause. This is exactly what we should be doing. Companies that are immersed in the connected experiences of digital ecosystems, it's all about trying to make your partners clever. Enable them to be clever because they'll do the customization, they'll do the personalization. So there's a huge amount of thought that goes into taking friction and difficulty out of your partner's ability to deal with you and to extend your brand and extend your proposition into segments that you don't want to serve yourself directly, or you couldn't serve yourself directly. So there's a big sociological change in terms of the innovative process, and then the mindset of how to look at the market, because when you're trying to do everything yourself and you're not working very actively with a big ecosystem of partners, you slice the market into the mass market segments. So banks slice the market into consumer banking, high net worth banking, corporate banking, small business banking. It might have 5 or 6 segments. But the platform providers or companies that are even providing apps on platforms, everything's a micro segment. So if you are a trapeze artist who's left-handed and short-sighted, there's an app for you. And in that context, there's huge micro-segmentation of the market. And for bankers, it's the journey to, I'm going to have a great app, to, I'm going to have API products. That means that we can get banking into a vast number of highly specialized digital experiences. And I'm not just going to have API products that are going to be consumed by enterprise vendors that are serving farmers. I'm going to try and serve tillage farmers and dairy farmers, and going to try and have my partners, a very large ecosystem of partners providing the primary digital experience, but they can extend the customer journey into my banking services. And if I architect myself correctly, both from a business and technology perspective, I can do loans that I was never going to do myself, operating by myself. I can get data about the performance of these farmers that I could never have gathered myself. So in that context, it's a sociological challenge to make this strategic marketing shift and recognize that banks are still going to be banks, but this type of marketing approach means that you can take 10 times as many attempts to make a loan because your partners are doing the last mile of the journey on an ongoing basis. And if you can be in 10 times as many journeys, you can do twice as many loans.
Fascinating, fascinating. Well, thank you very much. That's about all the time we have, but that was a really, really interesting discussion. Both personally, I enjoyed the historical perspective, which really makes it easy to contextualize so much of what you're talking about in terms of what's happening now and probably what needs to happen going forward in terms of 21st century banking.
Thank you very much, David.
Great. And thank you all for joining us for Finovate Fall Digital.